we're at that time here to get started. Thank you for joining us. Looking forward to taking a deep dive into the biggest hidden costs in your landscape business, and we're going to focus a lot on sales, right? The sales process, and really dive deep into that. I'm joined here today with the other co-founder of Cycle CPA, Carla Policastro here, right beside me. We do anything from remote CFO to remote bookkeeping services for the green industry. And we're also joined by the CEO and founder of Groundwork, Jeff Rowley. And he was kind enough to take some time out tonight and share some of his sales wisdom. And Groundwork is a great software, specifically more for the sales aspect. And Jeff is going to get deep into that as well during this webinar today.
Yeah, appreciate you all having me, and excited to dig into some costs. I have a random assortment of business experiences since graduating undergrad, and one of them was building spreadsheets and looking at financial statements. So I like hanging out with numbers people, even if it is little bit dry to some people. I get a kick out of it. So excited to be here. Thanks for having me.
Awesome. All right, so we'll dive in here, and one of the things about thinking about sales, right, and how that ultimately falls into your labor expenses, right? Labor expenses, could be anywhere from 40 to 50% of the revenue that's generated in your landscape company. So it's something that we want to pay close attention to, and it's something that we're going to touch upon a lot during this webinar tonight. And one of the items here, and it kind of really goes hand in hand with softwares like Groundwork and different things within the industry, but sometimes the most common thing, maybe even what your competition is using in your local market, sometimes their processes and systems may not be the most efficient and best option for your business, right? So educating yourself and coming to webinars like this to see those different things that you can do to get that competitive advantage, and then also thinking about as you look at different jobs or potential jobs, and you go to hire an employee or equipment, it's easy to look at some of the return on investment there, but what are the other aspects of your business that you could potentially get a return on a certain investment as well. And one of the other principles here in number 3, really focusing in on, all right, we're generating all of this revenue, we're producing all this work. How do we ensure that we're actually profitable when we're doing this, and how is this going to tie into your sales process and your sales team, or you as the owner if you are the salesperson still. And then the fourth principle here, and I think this is a huge takeaway, is you want to think about if you're too busy or your administrative staff are too busy, you want to think about ways to approach that and maybe not hire an additional person, right? And figure out a way that you can optimize different softwares or systems or processes first. So, these are just some main takeaways to kind of keep in mind.
Yeah, if I could jump in there, one of the things, I was at another industry event last week, and one of the things we talked about kind of goes to number 4 is, I guess the point was like, hey, when do I invest? Maybe not so much it was when do I invest in technology was more of the question they were asking, but same can be said for an additional administrative employee. A lot of it has to do with trajectory and the confidence you have in your trajectory. So you might be busy and you might expect to continue to be busy for whatever other factors in your business and the plan you've put in place. But to solve a short-term need, hiring full-time people, can be really challenging. You need to have confidence in the plan that you're running. All of the things that you're doing from a marketing, from a production, all those factors play into how you should be thinking about your staffing model.
Absolutely. Yeah, no, I think having, those are great points there, Jeff. And we'll first start off with some of the important items when it comes to being able to track and ultimately, since we are in a webinar with a CPA over here next to me, we want to make sure that we're covering all of these bases. So first, before we get into sales specifically, let's first look at the whole company, because I think everyone could take away some, nuggets here to, keep in mind. When you look at direct labor, a lot of people look at your direct labor percent to revenue, right? You're out of your total revenue, your direct labor is, let's say, 35%, right? Of that revenue. So, and another way to look at it is, look at some of your cost of goods. So all those direct expenses that are directly associated with generating the revenue, look at those almost as pass-through expenses, right? Those are items that you're really passing through to the customer. One day you may be, you may have to spend a lot of money on a subcontractor, or on, you go to this mansion and you just spend a lot more materials that day, but it doesn't necessarily mean that your labor worked any harder. So think of those costs as more of your flow through costs, and everything under that. So your direct labor, gross profit, right? Think of that as all of the funds that you have to pay your direct labor, and how would your direct labor compare to that? Then you look at some of your administrative labor, right, which is the middle column. Ultimately holding them accountable to how much gross profit is being generated. So all of that green, so the revenue, cost of goods, direct labor, those are more of the expenses that they should be controlling. And then ultimately you have what's left over, which is the gross profit that they're going to be held accountable to. And then the business owner, many of you are business owners here, looking at your net profit, right? That's ultimately your responsibility. So, I think it's first good to kind of take a general look at this here. And this is just another view at it. It's more of a numerical view. So looking at a revenue of $1 million, let's say, your cost of goods and your direct labor, then you're left with that gross profit, right? So within that gross profit, you have to pay overhead expenses. You have to pay your salespeople, your accounting staff, your HR staff. Even if you don't have full-time people, right? You're allocating certain time and funds to that position. So this is what you have left, right, to pay your salesperson, right? So, and this is what they should be held accountable to, because just as I mentioned before, a lot of those costs, especially those direct costs, are more of a pass-through expense, and that's irrelevant, because at the end of the day, you only have so much gross profit to be able to pay your overhead expenses and your salespeople. So that's a more accurate number, right? The farthest you can get away from comparing things to revenue, the more accurate you can get it. And here you can see what I was mentioning. So instead of doing it as a percentage to revenue, you can also look at it as a percent to gross profit, right? So looking at your overhead expenses as a percent to gross profit, in this example, it's 56%. So that's the number that you should be tracking on a month-to-month basis. Especially looking as you go on in 2022 from month to month, and if your gross profit is increasing at, let's say, 20%, you want to make sure that this 56%, that you're not really increasing past that. And there are some reasons that you may have to, but like if you're hiring ahead of time or you have to make a certain move, there are certain reasons, but it's something you want to keep a close eye on.
Yeah, one thing here, Joe, I'll jump in is, this is also likely a seasonal. Well, for many people, will be different seasonally. I would imagine you see that. Slower times of the year, tougher to keep this afloat, especially if you're, have a non-seasonal model for your employees. So there's some float into how this metric will track. But I love the metric in general. This is almost like an office efficiency number in a way, right? Where like that cost of goods percentage, your gross profit percentage is a little bit more of your on-site efficiency. And the overhead expense compared to revenue gives you a sense for how efficient your back office is at producing revenue in a way.
Yeah, absolutely. And it's something to definitely keep an eye on. And the whole seasonality of it, plays a huge role, especially when, and this is something we see a lot, when businesses are, they may think that they're making a great profit during the busy season, but if they don't do much business during the winter, you have to come into the spring rush or during the busy times and almost make sometimes a higher profit margin, right? Because your off season may have similar amount of fixed expenses, right? So you have to keep an eye on that. So that's a great point, Jeff. And then really the bottom area, really looking more into your, even breaking down the overhead even more. So taking out your administrative salaries out of the overhead, right? So out of that 25%, 10% of revenue goes to your administrative staff. And the even more accurate number to track is that 22% of your gross profit, right? So those are some things to keep in mind.
Question for you, Joe. How many, let's say you get a new customer, or maybe if the customers that you've been working with a long time, how do you break out administrative salaries, if at all? Do you break out in a different chart of account? You have a different account for sales versus, office admin versus marketing? How closely do you track that?
Yeah, that's a good question. So typically we don't like to break it out as granular unless we see that the overhead salaries are very large to a percentage of revenue. So if they're over 10, we kind of are like, all right, where are we spending the money? Is it in the sales or in the office? But typically we keep it all in one line item. We do like to break it out owner's salary, especially if you're S Corp or Corp. We like to keep that in a separate one, the owners. But typically keeping it all in one or two main buckets is best, because once you start getting too granular, it kind of fogs your vision when you're looking at the profit and loss statement.
Got it. Cool.
Yeah. Especially with, smaller companies that the owner may be doing all of those administrative tasks.
Right.
So it gets a little, but then I know we have some people on this webinar that have multiple divisions, so
you'll
as you get larger
by division at that point, like the overhead salaries per division is extremely important if you do operate within multiple revenue streams, because you want overhead salaries, as we're saying here, it makes up one of the largest percentages within your overhead, right? So if you have it broken out by division, then that helps you track the profitability even more granularly and also trace that back to your estimating process and how you're recouping those overhead salaries.
Yep.
Yeah. And yeah, as Carla mentioned, it can be literally half of what your overhead is. And, sometimes for larger companies, especially, and, even small companies, you can take these same principles too. If you're able to allocate that overhead, you should be doing it. You should know that a certain salesperson, for instance, is only working in one, does more selling in one division. That's a huge deal, right? If you have a maintenance team versus a design build, your salesperson is probably going to be a lot busier with the design build, as they need to get a project every single time, because it's so it's important to understand that. So no, that's a great question, Jeff. And then here's a look into looking at your gross profit, and then breaking down your administrative salaries, right? So, and these, and it's important to first understand, don't look at this and say, oh, my HR has to be this percentage of that, and my marketing has to be that. Each company is very different. That's something that we see when it comes to the administrative breakdown, right? Because some people may outsource their marketing. Some people may have it in-house.
Yeah.
Some people may not have, some people may do more boots on the ground marketing, whereas some people literally don't really have much marketing staff that they're paying, like in this example, and maybe they're doing more digital marketing, where it's just more ad spend, which is not included in this. So there are a lot of different factors, but this is something to, this is an example, and it shows you kind of the philosophy behind someone that may want to add on a salesperson in a division, or add on even their first salesperson. So looking at your total administrative salaries in the box to the left, you can see that from even the previous slide, it's at 22% of your gross profit, right? Which is the 100,000. And that's broken down into an allocation for each individual role within the company. Basically, in this example, you can see that for your sales team, or maybe it's the owner in this example, you're allocating $25,000 a year to that owner to sell. And that's what, when you add all those up, then you get your total administrative salaries. Now, this owner, right, he wants to ensure, as everyone should, that as you grow, your overhead expenses are not increasing at a faster rate than what your gross profit is increasing at, which is something to definitely look at, as this year goes on. And we already mentioned that how big of an influence just the salaries, your administrative salaries, has on your overhead. And when we say administrative salaries, that means marketing, accounting, HR, even people that are in the field, but they're not actually performing the work, like some of the management, the different stuff like that. So anyone who is not in the field actually performing the work, that's really what we consider as administrative salaries, right? So now this owner, right, he wants to take on a full-time salesperson, paying, with commission, salary, benefits, everything equals $60,000 a year. But he's also going to continue to do his selling, which was worth $25,000, right? So he was gonna that was gonna remain his allocation for his specific company. So therefore, on the box to the right, you can see that it'll be a total of $85,000 for that allocation to sales, right? So for them to perform sales, they're basically paying that amount. So some still to the owner for what he was already selling, and some to that new salesperson. And then you can see how we increased each other, administrative salary slightly, because if you sell more, you're going to have to hire more. So you're going to potentially need a little bit more of an HR cost to that. you're also going to need a little bit more management, because you sell more. There's more, labor to manage in the field. So, and then ultimately you see that your total administrative salaries actually jump from 100,000 to 200,000. And one of the things to kind of look at now is, all right, so what is that gross profit figure, right, that I need in order to maintain my profits, right, and make sure that I'm holding my salesperson and the rest of my administrative staff accountable. So you take the 200,000 divided by the 0.22, which was the 22%, and it comes out to the $900,000 in gross profit. So you can see going from the 450,000 in gross profit in the diagram to the left, then needing the $900,000. So it kind of shows what that kind of looks like. And one of the biggest takeaways here is commonly, you want, I would always think twice before you hire administrative staff, like salespeople, because these people are not generating revenue for you, right? They're not direct labor. They're not the people in the field working. So you want to pay careful attention to every one of those hires, and do really anything you can to expand what they can accomplish through processes or softwares, different things like that, which we'll get deeper into. But
one other thought on that. You caught me when you said sales people aren't delivering revenue, but I understand what you mean by that after you clarified. I think the challenge with the sales role is that it's a delayed gratification, right?
Yeah.
You got to pay the bill for a couple months. They get their feet under them. They do a crappy job selling for a month or two. Then they sell some stuff, and then you got to get it on the calendar. And before you know it, you're 6 months in before any dollar that employee has produced actually hits the bank, right? Like that's not far away from kind of, especially with the backlog of work that I'm sure a lot of people have here. And I'm talking more design build side of things, but that's something you should think about. As I'm thinking about hiring salespeople, I think the same exact thing. How long does it take them to bring me dollars in the bank to
Absolutely.
actual cash register? So that's one thing. The other thing that came to mind when you said, kind of in scenario 2 on the right hand side here, to generate 900,000 kind of to pay for that salesperson. The goal is to hit that $900,000 gross profit. And if you take the difference, 450 to 900, you've got, help me quick math, 450,000, right? If you're selling $50,000, $50,000, $60,000, $70,000 outdoor design build projects, and you've got some deal flow coming in, I think you can start to get your head around that a little bit, right? Now, there's certainly different tactics that you can use to, maybe adopt a different plan, or to be even more efficient and, be able to do some numbers a little bit and, increase your profitability. But it's kind of another way to back into that to say, hey, is this worth it? Or, how are you looking at this? Yeah.
Absolutely. And, I think looking at it through a perspective of, just like you were saying, Jeff, like it's totally an investment, taking those sales staff and, them being the reason why you are able to grow. And that's something that, people definitely have to realize as they scale. And I think a lot of people typically look at sales positions and they think about revenue. What revenue can they bring? So I think this is just something to kind of look at, to focus more on profits, gross profits, and then as we get later on here in the slides, looking even at net profit. So
one thing before we move on. So um, when you do hire any of these overhead staff that we have listed, as we're referring back to gross profit and such, I think that it's important for us to, as business owners, measure and keep these employees accountable to what you hired them for. And so it's like Joe said, it's a little difference because we know field labor, direct labor hours. How many hours did you work? How much hours did you generate? Now, there may be different measures when it comes to your sales staff and your operations management. So, for example, your operations management and support staff, they're there. You hire them so that your gross profit could be maintain a healthy percentage of your revenue. They're there to control those direct costs, such as direct labor and material cost and fuel. That's what you've hired them for. So they should be held accountable to gross profit. That's the reason why, because um, they should always be working on how can, as a company, can we be more efficient with our materials and our labor and our estimating processes and it's just our internal processes. So if you start thinking about things that way, so now even with HR staff, just another item, that I see there is they can be held accountable for direct labor efficiency, because if they're hiring the field laborers, are these people getting a like fast turnaround rate? Like, are they, coming in for 2 weeks and then leaving? Then, HR staff is not doing the correct job in getting qualified candidates that are going to work on time, be show up on time, and so on. So, we're not trying to scare you away from hiring these overhead staff, but it's all about tying it back and keeping them accountable and measuring these items.
Yeah, that's very well said. I love the idea of holding administrative staff to a gross profit goal. I mean, that could be aligned in a bonus comp structure at the end of the year, or quarterly or whatever else. I'm seeing in the poll here, which if you're tuning in and you haven't voted or put an entry in on the poll, how many full-time salespeople you have, go ahead and do that. I'm going to close that. I don't know if you can see the results, but I can kind of see them live. So most as of right now, 53% of the people here have no full-time salespeople. So when you talk about HR, kind of how that works, like there's a slice of that business owner who, if they don't have a salesperson, they probably don't have an HR person. And right. So you're holding yourself accountable to the turnover. And right. You know how painful it is to lose a crew lead or to lose a crew member, right? Like hard to, you're okay, back to the job boards, back, it's really painful. So, there's a lot of richness in comparing these numbers and at least knowing where you're at.
Yeah.
So that you can kind of hold yourself accountable, even if you don't have staff underneath you. I guess one question for you all, and I don't think this is a softball. How do you recommend, let's say that somebody is doing a not so great job with these numbers and they go ahead and they run some of these numbers. And they say, okay, here's where I'm at today. Where's a good spot to shoot for? Is there a benchmark that you see, or is it, hey, come talk to us and we'll help you figure it out? Are there any? How do you deal with that for somebody who might like pull out their P&L and just be like, oh, am I doing well? Am I not doing well?
The benchmark for overhead salaries vary from the service line that you're in within the green industry, but generally speaking, it's anywhere from 10 to 12% of revenue. And so we've had businesses where we've looked at, and they're either on the line or over that amount. Then if you are over that amount, then you want to get more detailed, like I mentioned before, Jeff. Okay, who's taking up the most a percentage of this percent that I have here for my business, and then diagnose. I mean, if you see some low hanging fruit, right?
Mm-hmm.
Or if you can see some opportunity for cross training within your overhead. So, like Joe mentioned before, leveraging some of your sales staff or your operations management, maybe they can help a little bit with marketing or training and so on.
Yeah.
Cool. And I just want to mention one thing first for everyone. Just also know that this top line number to the left, that's gross profit. So that's after your direct expenses.
Yeah.
That's after your cost of goods. So your direct labor, materials, subcontractors, equipment rentals. That's the profit after all of those expenses. All right. So just keep that in mind.
Yeah.
So. And here for the next slide, looking at each company, you may think about paying the salesperson differently, right? Having a different structure, whether it's salary only, commission only, or both.
Right.
But some things to kind of think about is, finding a way to kind of continually keep them motivated. Aside for, I guess, the culture and how you as the owner run the company and things like that, but maybe looking at things that, not only if they're getting profits and different things like that and getting the commissions, right, but also, is there a certain gross profit or revenue goal that you want them to basically hit, and if they hit that, do they get an additional bonus?
Right.
To kind of keep them motivated. Also thinking about from company to company, and this is why it's sometimes hard to do benchmarks when it gets this specific. But looking at things like, all right, this salesperson, they may be responsible for getting the majority of the leads in the community, then doing the sale. Whereas another company, they may be getting more leads from, let's say, Facebook and digital marketing efforts, and it's not very difficult for them to get the leads, and then now they only have to sell. So there's and it could be said that each one could be paid differently. Maybe you pay the person that has to get the leads and the sales in a different manner. How much would they have to be trained? What is the competition paying? That's the reality sometimes, unfortunately. Just basing the commissions off of gross profit or net profit. Be careful when it comes to revenue. And Carla, do you want to dive into that?
Yeah. I become passionate about this subject just because when you get your sales staff to just focus on revenue, that could be an easy mark for them to hit. And just holding them accountable to gross profit, then you're holding them accountable even through the estimating process, right? When it comes to your cost of goods sold. And so tying that to their wage is going to get them motivated to talk with the estimator, to the ops manager, because now if their commission or salary or wages get tied to gross profit, they're going to want to know, are we estimating these items correctly? And not only that, so we've seen clients who, their salaries and commissions are based off of gross profit, right? Which is great. But then when you come to like actuals, when we're looking at the job cost reports after the job has been sold and, you know, they've done the work. And even looking at the profit and loss, that gross profit that was supposed to be hit wasn't actually on target. So it's making them accountable for the actual gross profit. And so that, again, that'll put an emphasis on them communicating with the other departments within the company. And again, tying their commission, tying their wage into something where now they're being held accountable for the cost of goods sold, you know, they're going to be highly motivated at that point rather than just revenue. And when you first hire your first sales staff, or maybe you have a sales staff, they have to know what your company's mission is and what you are looking to serve. And what kind of projects do you want to take on? Are you a company that just wants to take on outdoor living spaces, and your base revenue is 10,000 and your gross profit is 55%? These are the marks that they have to hit, or else you know, they're not selling what you would like for them to sell, right? And so having those clear expectations up front and that follow through all the way to actual gross profit, that's really what's going to make sure that you're profitable throughout, you know, the entire time. So that's where I see the disconnect is, yes, tying into gross profit, but then at the end of the day, when it's all said and done, 2 months later, when you're done with the project, it doesn't even hit that target. So, you know.
Yeah, I would say, you know, we deal with salespeople. Our software is kind of like a de facto salesperson in a way.
Yeah.
So we see a lot. I do agree that building commission off of gross or you know, net profit on a project makes a ton of sense, because otherwise you're just going to sell people selling jobs out there just to get it sold, right? And then
then
you're just not profitable and nobody's happy, right? But on the flip side, as a business owner, you're going to lose a salesperson really quick if you don't have your stuff together on the project site to deliver the goals that salesperson has put together, you know, their expectation. It's a really good way to lose a good salesperson is to, you know, screw things up in actual production.
Yeah.
And then they're like, hey, I did my job, you didn't do yours, I'm out. You know, here was what I was expecting, here's what we discussed, here's, you know, and then you didn't deliver. So it's a delicate balance. I think explained well, it will make sense. I think there's some creative things you can do too, especially as salespeople are getting ramped up.
Yeah.
You know, there's maybe a blended way to do it. I'm not the pro on that, but yeah, I just think that understanding that compensating a salesperson on something other than revenue, something kind of further down the P&L, you have a responsibility to deliver as a business owner.
Yeah, that is true. And I think that you're 100% right, Jeff. And you know, why not hold yourself and your other team members accountable at that point, right?
That's right. Yeah, everybody, like we talked about, right? The admin staff can be compensated that way too. So there can be just a large amount of alignment there.
Yeah.
Because then I mean, then you're not paying bonuses on materials that you buy and resell. You know, like that doesn't make too much sense. You know, it's more about like what you actually put in place, how efficient you were, and you know. So yeah.
Yeah, and then I think it's almost kind of interesting because it then aligns pretty closely with open book management. You know, and now this salesperson has a very big incentive to not only communicate with all the other members of the team, whichever department that they're in, you know, but really almost acting almost in like an ownership way, and helping to hold people accountable, and that's the goal. Like that's the that's a great place to be as a business owner, to have other people that are holding other people accountable,
and
that are not you.
And that takes a certain type of culture, right? That can be accusatory. It can get accusatory real quick, hey, you didn't do this, like you're messing with my number, basically. So that can be challenging, but I've seen it that each project has a gross profit, basically posting job tracking on a TV in the office and a live update board to say like, hey, here's the projected, gross profit from this project. Here's where we are, we're X% complete. That's some next level stuff, in terms of like getting all that stuff reported, getting it up there and everything. But that can be really, really effective because it drives towards a goal that everybody can get behind.
Yeah, absolutely.
Yeah.
And no, those are great points there, Jeff. And then also kind of looking at managing risk, right, which is a huge part of a business owner or a leader, and there are definitely times when it is necessary to hire employees ahead of time. And when I say ahead of time, being in a position where you may not necessarily have the funds to be profitable if you were to just look at that employee, because you're ultimately your goal, whether you're hiring direct labor or administrative labor, is for that hire to help you generate more revenue or take things off of your plate. But that's something you want to keep an eye on, just because that's something we see a lot, with people. I'm not sure what that ringing noise is there. I'm sorry, guys.
Somebody's calling us.
So, basically, even if you're in the position where your salesperson, they you may not even be able to have a full-time salesperson yet. Maybe have them help with some other activities within the business. Make sure that your marketing, that your whole marketing process is down and efficient, so that you get leads flowing, right? So you're supporting your salesperson, and they're able to perform and kind of almost handpick some profitable jobs, instead of being in a position where they feel desperate and they have to pick jobs that may not be profitable for the company.
Right.
So, and if you're in a position where you're not able to even provide like a nice base salary for the salespeople, it's probably not a good thing, because then they'll be more desperate. And yes, there are some times when, for a very motivated salesperson, they can even perform better and probably even make more with commission. But, these are all different things that, you want to make sure that you're setting your salesperson up for success.
That's right.
And, I think this next bullet here is huge, even when I think about groundwork and some different softwares, and the way that the industry is going. Instead of thinking about having to hire this perfect salesperson that's going to do magical things for your business, think about the processes and the systems that go behind it, right? And even the checklists, right? Or the systems that you have in place, where now all of a sudden this person is not as valuable, right? Because I have all these things in place, whether it's softwares or whatever it is, where even if the person left me, someone could slide in and, they can take over the job a lot more easier now. So those are things to focus on, focus on those, and not, and because even in today's world, it's hard to find that perfect person, so see what you can do creatively to, counter some of that.
I could not agree more. I need to get a quote from you saying that, because it's so true. Here's a derivative comment on it. If you have good systems in place, if you have awesome tech that makes a salesperson effective, you're going to get good salespeople. That's going to happen. They're going to seek you out because you have your stuff together. When it's when you get into a spot where you don't have your stuff figured out and you're kind of paying somebody to figure it out on their own, and you don't really know how it should work, and you're relying on them to do it, and then they might stumble, and then they're like, "Ah, man, I'm out. I'm going somewhere else," because they make 5,000 more on a base salary. Probably sounds familiar to some people on this phone call, right? Like that's common. So when you have systems in place that make your employees, especially salespeople who just want to sell, if you get a good one, and they want to achieve, then maybe not even a salesperson, just somebody who wants to achieve, you can make them a pretty good salesperson if you have good systems in place.
Yep.
Absolutely, Jeff. And I think this goes with a lot of other positions too within the company.
Yeah.
Absolutely. If your processes are wishy-washy in how you put together a patio, or or even how you approach the whole the whole framework of doing maintenance on a property, then how are you going to expect your employee to perform at the level that they should? You're like your owner, and the different quirks that you do and the different shortcuts that make it work. You have to understand that some people may not have that instinct, or they may not have that skill.
It's true.
So think more in terms of processes and systems.
Yep.
So that's awesome stuff, Jeff. And and when you think about the sales employee, just kind of going off the fact of all right, trying to think about how can we stretch this person in the way of not physically, but in the way of making sure that or setting it up so that they can produce and sell more, right? Without having to hire another salesperson.
Right.
That's ultimately the goal, right? You want to, and that's how you'll see higher profits, because here you can see the whole list of expenses that come along with a salesperson. And especially even looking at Jeff, if you want to give everyone a kind of like a little better understanding of what groundwork is, and kind of like how it's able to fix some of these problems too.
Yeah. So one thing that's not necessarily listed here, I guess you probably have some sort of vehicle expense. Yeah, vehicle expense. Many of you are probably aware of the term tire kickers, or have had experiences where, in whatever business you're in, you've run a sales appointment of some sort, and you realize you're not talking to the right person. They're not going to buy from you. It happens a lot, and in the green industry and other kind of home improvement industries, there's vehicle expense, there's the travel time around town. You just, especially with gas prices the way they are now, and the spring rush coming, that adds up. So when we talk about kind of administrative expense kind of earlier in the presentation, salespeople can make up a lot of that. If you're a solo person and you're running, kind of doing the project management, ordering materials and doing all the admin, and then also doing the selling, there's opportunity costs to running the sales appointments, right? So what else could you be doing if you were able to pre-qualify your leads better? And really, that's the problem that we help contractors solve, is pre-qualify your leads, make sure you're not wasting time, and really run a more efficient sales process from your perspective, whether you have a sales team or you're running it yourself as the business owner. And then on top of that, kind of that's a cost saving side of the ROI calculation that we help contractors understand. But then the other side of it is we provide a really awesome customer experience. Our system helps homeowners upload a video of their project without you having to do really anything. So our system is text-based. It walks them through some pre-qualification process and really helps them understand what to include in a project video. We kind of give them a little bit of a tutorial, work with you to customize that. And then you get a video of their project, whatever the work they're looking to get done, ahead of that sales appointment. So sometimes you can just completely cancel it out because, hey, we don't want to mess with your $10,000 house, and we're not going to try to sell you a $60,000 pool, right? Like that's just not in the cards for some leads, and that's okay. They're probably going to be happy that you disqualified them as well, right? It's a waste of their time. So our experience on the customer side of things, it makes you look good. It saves you time, reduces costs from a salesperson, sales effort standpoint, but then just generally just makes contractors look good by providing a unique, memorable, quick and easy virtual experience for homeowners who want to get their stuff done, want to get answers quickly on their project.
Awesome. Good stuff. And, I think and what kind of comes to my mind first, Jeff, is, when you think about some of these online forums or Facebook groups, we have a Facebook group, Landscaping Accountant. So if anyone wants to join that, if you're not already in there, but, and there are some cool things that you can find out in groups and different things like that. Right. But, when it comes to, I'm this revenue level, should I hire this employee? Should I do that? Even going off the first slide in this PowerPoint, right? And thinking about, what can I do, right? That maybe my competition is not doing, because you sometimes, especially as the practitioner or as the artist, even, doing some of these projects, or, as the business owner, sometimes you just need that little switch in mindset from, all right, some of these things and some of these, things where I'm concentrating in the field and thinking about, all right, what can I shift administratively to give me that competitive edge over other businesses? Because if you get that competitive edge, then that'll give you more room to do some of the cool things and produce. So I think that's great, Jeff. And it goes along with, technology, right? And think about what you can do now in your business to kind of, improve on that, and look at every role, because every role is going to have that software or, some way to automate it and different things like that. So just kind of open up your mind and, think what are some of these possibilities out there?
Yeah. And it's kind of easy to say or to suggest software, but when you are looking into software, it is going to take time investment upfront from the business owner to get the software to be working for your business efficiently and accurately. And a lot of owners will that I talk to, they implement any software and they're like, well, that didn't work for me, so I'm going to move on to the next one. And that's not the way it works. The way it works is that maybe I'm not going to say all softwares are going to work for you, but maybe most of the top softwares are going to have its advantages and disadvantages. But I think that most of the time, the reason why the owner or the business doesn't benefit as much from it is because there was no time investment into the software to establish your procedures within that. And that goes from anywhere from accounting all the way down to management here in the software section. So what can you do today in your time investment into any of these aspects within your business, right? It is going to take some time to tweak things, to create a policy procedure within this, but this time investment is going to last within your business for the next couple of years until you need to rework your system, because it's inevitable when you're scaling a business. You're always going to have to rework. But if you put the energy into implementing a software correctly, it could take your business from 1 million to 3 million to 5 million. And so that's my number one thing when it does come to technology, software, and automations on that end.
One thing I'll add to that, because I've seen a lot of pieces of technology. I've implemented pieces of technology in other small businesses and larger businesses and done a lot with kind of the change management around tech. One thing I will add, one thing I would suggest is ask whoever you're talking to from a sales perspective if you can find an answer to what the implementation timeline is. It's a really, really important thing to understand, and maybe more important, who should be involved. When I've seen tech implemented well, not only one person is the decision maker. Usually there's multiple people involved in the decision-making process, ahead of the decision of what we're doing. And then on top of that, there are multiple people involved, kind of internal champions making it happen, and a clear understanding of what you're getting into, right? Like groundwork is up and running in usually a week to a week and a half. That's our typical. Sometimes we can do it quicker. Sometimes it takes a little longer. But if you're doing a full-on CRM and job costing thing, that might take a little bit longer.
Yeah.
You know?
Yeah.
So you need to have an understanding of that. And if you've got a decent salesperson who's, not just kind of a slicker salesperson, they should tell you what that timeline is.
Yeah.
Awesome.
Yeah,
and then, as from our perspective of doing like the bookkeeping and the accounting, and it's really our goal, to find things and to be able to, give to you guys that could potentially help improve your profits, because looking at the financial reports is great, but, what can we do to then improve for the next month? And that's why we hold these webinars and we do these things, because we want to give you guys actionable things that you can do to improve on that
profits,
stuff.
Yeah.
So, you want me to take them through this real quick, Joe?
Yeah. Absolutely.
All right. So I'm putting my email address in the chat. Feel free to email me if you want to copy this. We designed this to kind of be an interactive workbook. It's just an Excel document, but this is something that I'm happy to send to you. Just shoot me an email and say, hey, I want the sales worksheet. But this whole idea behind this, really, one thing we track and we have started to wrap our mind around a whole lot more recently is a sales efficiency ratio. And the sales efficiency ratio is, it's not an official financial term or anything like that. It's just something that we've started to think on. Essentially, if you choose any quantum or any number of dollars that you want, let's say $10,000, how many hours does it take you from a sales perspective to earn $10,000? Your number might be $100,000, but tracking that and understanding what that takes, and you could even back it into cost, which is more about what this spreadsheet goes towards. But if your revenue is $1 million, but you've got 4 or 5 salespeople out there, like those metrics are not very good. that sales efficiency is very bad. So you got to be thinking about that as you're structuring your sales team and thinking about using a tool like Groundwork as well. So the top left corner here, inputs from contractor. The idea here is how many sales appointments do you run per week? I put 10 down here at a 30% close rate. How many of those sales appointments do you typically turn into a project, revenue producing project? And how long does it take you, including travel time, to go and run those appointments? These numbers are going to be different for everybody. This is just kind of an easy example. Let's see, what's the next one? Okay, yeah, closing ratio, 30%, weekly cost of sales appointments. That's actually kind of due to the assumptions of the cost. So we said, hey, $30 an hour, and then your vehicle expense rate. I kind of guessed at that. That's going to be different for you too. But at $30 an hour, including the bonus in there, $60,000 for a salesperson, and then you're going to have some expense for gas and everything else. $45 per hour that a salesperson is running. And then there's monthly cost for Groundwork, which is just our service fee, which factors in some of the other equations here. But if you go to the calcs, our closing ratio is 30% up at the top right here. Weekly cost of total sales appointments. So $1,000 for a week of sales appointments, 10 sales appointments. Kind of an interesting metric. And if we can cut out 10% of those bad ones, right, the saved visits, then you're saving, 150, $200 a week. And that starts to stack up pretty quick. So the whole idea that we're getting to with some of this thinking is, what if you weren't running 7 sales appointments that didn't turn into nothing, turn into a goose egg, right? 3 of them did, but 7 of them didn't. Maybe you only kind of swing and whiff on 2 of them. What if that was your closing ratio was 60, 70%, and you're only kind of, quote, wasting time on a very small portion? Your business is going to be way more efficient. And for those single business owners, kind of the sole proprietor type out there that's doing all the sales themselves, I'm sure that's music to your ears, because you're not running around town trying to find the diamond in the rough and having to kiss 7 frogs along the way. So anyways, that's kind of what this is set up to do, is just give you a different look. This isn't exactly like a financial model, or like it doesn't tie necessarily to your financials that Cycle CPA might put together for you, but it's an interesting way to think about how you're investing your time in your sales process. So yeah, email me if you want to chat through this. Like I said, I love numbers. I love going through this stuff. But hopefully it's helpful in kind of thinking about how you can build efficiency in your sales process. And our product at Groundwork, this is what we're built to do, is really pre-qualify your leads. Don't waste your time on leads that aren't a good fit for you. Use our product to really gain an understanding before you spend time and money running a sales appointment.
Yeah, I think this is a great way to quantify that cost and the savings that come along with just speaking with qualified leads, and thinking about, yes, these savings are great, but then also now you have this time back to yourself as a business owner, so you can make more sales, invest more in administrative tasks, and so on. So I think that's great for sure.
No, this is awesome, Jeff. And so definitely reach out to Jeff via email for that Excel sheet. And then you want to be prepared, and this is kind of what we even touched on in the marketing webinar last month. Looking at making sure that the rest of your company is prepared for what's to come and all of these extra sales that you're about to get after you get Groundwork. So
that's right.
You want to keep a close eye on that, and have that understanding, that each part of the business affects every part. So it's something to always keep in mind. And communication in regard to your sales team. So the salesperson really should have a basic understanding of how the entire company operates, because they want to find or win jobs that are profitable. And in order for a job to be profitable, the whole company has to work together, right? So that salesperson has to understand the entire company, understanding the marketing process. If there's a certain amount of leads that have to be generated, so if they're going to sell $1 million of work, maybe they'll actually have to put out a proposal for $3 million worth of work in order to get that million. So make sure that they have that understanding. Make sure that they communicate with the marketing team, and then also, we're fans of open book management, but having your sales team very involved when it comes to making sure that they understand that they have a direct effect on the profits, right? And looking at the monthly financials and understanding that recouping overhead is a major issue that we see in a lot of businesses.
Yeah.
And that the salesperson is ultimately the first person that has a huge influence over that in the way that they estimate. So that's a huge thing. There's different ways to estimate a project with a gross with a gross profit, or I should say direct costs of $20,000. There can be many different kinds of jobs that lead to that. It could be $18,000 worth of materials, and then the rest is other expenses, or it can be $12,000 of labor. So, and understand that those different kinds of jobs have different overhead allocations that need to be made. So, and that salesperson really has to understand that, and if they don't, it's going to be directly reflected in the financials in an unfortunate, not so good way. So
So one thing that we have seen actually over these past couple of months, when we're having our quarterly or monthly meetings with our clients, is that we'll calculate revenue per hour, and also benchmark their business. And revenue per hour let's say it looks good for this company. Their pricing looks right, but then when we benchmark materials, it looks way higher than where their service line is supposed to be at. So at a glance, you can look at, okay, yeah, my sales price is good, but why is my materials twice as much as other companies, or where other companies are estimating, are at with material costs? And so this is where we're talking about communication and that disconnect, where it goes from estimating all the way to actual outputs. And so that's why it's important to look at your financials and hone in on where the problem really is, and kind of flipping your profit and loss on its head and your balance sheet and so on. So, good point, Joe.
All right. Awesome. And the salesperson, they have a huge effect in regard to profits and cash flow, right? So does this job require an equipment rental, right, that may make the job unprofitable, or especially if they're not estimating correctly? Can the direct labor actually perform that job efficiently? Is it a job that they're generally good at based off of their past projects? Are we already putting your field labor in a hole as soon as you get the job because they can't perform it well? Were the overhead expenses accurately accounted for within your estimate and within your pricing? So those are all things that directly influence your profits. Also looking at cash flow, right? Are you gonna work with a customer where he was referred by his best friend, who actually paid really late for his job, and there was a bad AR problem with that? Are these expectations laid out? Is the salesperson making all this clear to the customer in how payment has to be done and how it has to be on time? And even looking from the perspective of making sure that the materials, that they can get the materials from the vendors with pretty good terms,
right,
to help with accounts payable. Because for those of you that attended our cash flow webinar, that's a huge thing.
Yeah.
Is that salesperson getting jobs where you're able to utilize some of your equipment and assets? Because if you're not, then maybe you should consider changing the jobs that salesperson is going after, or maybe potentially getting rid of some of those assets because you're not using them. So all things to kind of consider there. So, and that's the last slide here. So if anyone has any questions on any of the stuff we went over, Here's some of the contact information. Jeff put his email in the chat as well.
Yeah, and
so-
again, we're doing anything from bookkeeping all the way to CFO services. And we just specialize within the green industry. If you like these webinars or this informational content, feel free to visit our YouTube channel, Cycle CPA. We post on there, and also our Facebook group, Landscaping Accountant. We post on there every day, and we have a good community. So it was so nice having you on, Jeff.
Yeah, thank you for having me, and encourage people to check out our technology. And I'm an open book when it comes to numbers. I'm not as knowledgeable at benchmarks and all that other stuff as you all are, but when it comes to technology, I've seen a lot. What can go right, what can go wrong, and so I'm happy to jump on. Just please reach out. I'm happy to be a resource if I can.
Awesome. No, I appreciate you coming on, Jeff, and I had a good time here, and I hope everybody got some good nuggets.
Absolutely.
All right.
All
Have
right,
a nice
guys.
night.
Have a good night.
All right. Thanks.
Bye.